Yo, what's going on YouTube? Welcome back to my channel. It's your boy Trade with John, and today we're going to be talking about how you can get very, very high probability entries and trades on any currency, okay guys? Now, we're going to get straight into it. Now guys, you have to understand that when you're looking for amazing entries, you have to go based off the higher time frame, okay? Like you just need to. You got to go based off the higher time frame because they're going to give you the best possible entries. Now, the first thing you guys want to start doing is identify your trend, right? Identify the trend. So let's actually bring this back. Hold on. I'm going to bring price a little bit back, probably somewhere around here, right? Identify your trend, right? Price is going up, right? And me and my team, guys, we caught this trade last night. I wanted to go over it with you guys because it was a great trade. Right, identify the trend. We're on the 4-hour time frame. Price is obviously going up, so we're looking for nothing but buys, right? And you understand now when you're looking for buys, you want to wait for price to retrace, come back down before looking for the push back up. So now, as I'm taking a look at GBP, JPY, guys, I know that price is going up, right? So I'm looking at these highs, right? This nice little trend line that's being respected. And if you guys know anything about, you know, smart money concepts and institutional money and equal highs, equal lows, you guys know these are equal highs that are happening right here, right? So when you see equal highs, don't just think of it as a resistance, you guys. No. I want you guys to think of this as sell side liquidity, meaning everybody that's selling in this area for the trend line, their stop losses are resting above, okay? And when their stop losses are resting above, guys, this is an actual target for the large money institutions, right? The big banks, the hedge funds, right? The actual market makers. They see this and they want to target these highs. All right, same thing over here. We have these nice highs right here that were formed. They just wanted to come up and take those highs, right? And so the same thing's going to happen over here as we continue to move up. Price is going to create really clean highs, then manipulate us going to the downside, as you can see, and a very fast whiplash back to the upside, creating more liquidity, price breaking down again. Now people are thinking, hey, we're actually selling, we're actually looking for sells, when in reality we're not, because now this is when we're going to start to bring our Fibonacci out, right? So guys, you bring the Fibonacci out, right? First, identify the trend. We've identified the trend. Let's go ahead and write this down. We've identified the trend, and we know the trend is going up, right? On the higher time frame, by the way. Cool, right? Once you identify the trend on the higher time frame, guys, you want to identify points of interest. Now, what are points of interest, you guys? Points of interest is basically like order blocks, imbalances, you know, areas that where price comes into, it's more than likely going to react. Okay, so now if we take our Fibonacci, guys, you notice we had a low, we had a high. So if I get my low all the way up to my high, you guys know the 61.8%, the 70%, this area is a very reactive area, right? Price likes to react in this area and either move back to the upside if we're in an uptrend or back to the downside if we're in a downtrend. So I automatically seen this wick in this 61 area. Now automatically, you guys, guess what? This becomes my area of interest, right? So now that I'm interested in this area and price has come down to this area, right? Let's say price was over here, guys, and we had no idea this was happening, but we seen a nice push up from a swing low to a swing high. Now we say, okay, 61 to 70%, this is a good area, right? This is my point of interest. So now I'm going to wait until price gets into my point of interest. Boom, and you wait for the rejection, right? 3, wait for rejection into point of interest. Once you have your rejection, you guys, now we can start going to the smaller time frames and identifying an entry, right? So let's go over here, wait for rejection. Once rejection occurs, look for potential entry, right, on smaller time frames. And smaller time frames, guys, I mean 15-minute and the 5-minute time frame, sometimes even the 1 minute, but the 1 minute can, you know, kind of confuse you at times. But this is what we're looking for, right? So once rejection occurs, which we see rejection occurs, look for potential entry on smaller time frames. So now we're going to go on the 15-minute, you guys. And there's 2 ways we can catch an entry, right? We can catch an entry based off market structure break. As you guys can see, we had a low, a high, a lower low, a lower high, a lower low, right? And then a lower high again right here. So if we can break this high, there'll be a shift in market structure, a shift in momentum, and now we're potentially going to the upside. So as of now, guys, that's really the only kind of setup that I see right at this very moment, right? Of course, you can always wait till price gets back down to where it actually rejected from for your entry. As of now, a high probability entry would be wait until market structure breaks to the upside, then you catch your entry. So now we're waiting, right? We're waiting. And we took this trade, guys, closer to midnight, right? So midnight's around here, right? This is when I typically start to trade because that's when London session starts. So we're going to play this thing out, right? So now we're here at London session pretty much, right? And London session has what, guys? Some very nice equal lows. So what do you think is going to happen to these equal lows, right? Price needs to go up. If price needs to go up, we have a bunch of liquidity, a bunch of equal highs here, right? Targets. A major target right here, right? Major targets. So now that we have these major targets, we know price wants to push up, but they're not going to make it that easy for us, right? They're not just going to go ahead and just, explode and push price up. What the market makers want to do is get as many people on the opposite side of the market and then push price up. So price is more than likely going to drop, right? And then push and spring back to the upside. So now that I'm watching, that's what I'm waiting for, because we had this market structure break over here. We came right back into the zone, right? If I want to see a break of structure, I want to see a break of structure. I want to see price break structure and then come back down, and then we can catch our entry. We did not get that over here. Over here, we had a very, very fast move up and then back into the range. So we're going to wait it out, right? So now we're waiting, and there we go. Price dropped exactly at midnight, London session open. And now we're getting the manipulation that we expected, right? Price dropped below all these lows. It cleared liquidity, right? Now we see that. Now this is where, guys, we pay very, very attention, right? Very close attention. And now we catch the market structure going back up, right? This is when I like to sometimes go on the 5-minute time frame. And now I'm looking for highs to be broken, right? This is highs right here. And 1 second, guys, what we're going to do is all right, guys, and we're back. Sorry about that. I had to go grab my daughter real fast. But what you guys want to wait for now is a break of market structure, right? So we're going to slowly wait for this to play out, right? We had a high right here that was broken as well. So we kind of wait this thing out. We play it, right? Created another low, right? That's why it's good to wait for market structure to be broken, right? So now we can actually wait for this to be broken because now we actually have a high, right? Wait for price to break that high, right? I want to see a clean break. There we go. Very clean break, right? You guys see that. Now, the beautiful thing is now we can look for our entries, guys. And this is where we start to actually map out, our actual positions. It's always good to map out your positions beforehand, right? So I'm looking to enter right off the retest here. Stop loss right below the lows, so risking 7.5 pips. And you guys already know what the targets are going to be, right? Equal highs, either here, right? Like we TP1, TP2, TP3 up here, right? Or realistically, I would love to go for these equal highs all the way up here that I feel like price is going to eventually get to. It's a massive swing. So here, guys, we have a 1 to 17 risk to reward ratio. Okay, kind of incredible. So now we play this out. Guys, look at that. We literally get tapped into our position, right? Literal wick entry, right? So we really had no drawdown, maybe like a half a pip or 0.3 pips, right? And we just sprung up into profit. Now in the 15-minute time frame, look how precise that entry is, right? So I want you guys to just do a quick recap, right? Understand, when you have a point of interest, an area of interest where you want to buy the market, once the market gets there, wait for a nice rejection candle to show that there's some type of rejection there. Once you guys see the rejection, go on the 5-minute time frame, right? 15-minute or 5-minute, just a lower time frame in general, and you want to wait for market structure to be broken. So we waited, and we seen over here that there was a lot of highs being built up, and then price eventually sprung out that consolidation. Price eventually came back into that consolidation right here, and we had a very, very nice entry. Now, if you're someone who doesn't like to set stop limits, sell limits and buy limits, what you could do is just set an alarm close to that area. And once that alarm notifies you, then you can look back at price and determine if you want to get in. But I really like stop loss, sell limits and buy limits because you get the best entries. So now we kind of wait this out, right? And then we can get a good idea. Let's go on the 15-minute. We can get a good idea of currently where we're at, right? And as you guys can see, this is where we're currently at. Right, in profit about, let's check over here. In profit about 76 pips, right? We're almost to our target, almost to our goal. So as you guys can see though, we actually took out liquidity here, right? Took out liquidity here. And now I believe we're headed to this major equal high, right? Major equal high. And just a thing too, you guys got to think about the best probability that price is going to come up here. So even if we don't knock this, a better target would actually be, right, probably somewhere in these lows where price is going to actually get to, right? Don't get too greedy. Right? I usually like a 1 to 10 risk to reward ratio. We can probably aim for like a 1 to 12, which is, or 1 to 13 almost, which is right at the lows, right? And this is a good area. So now this is the trade, right? 96 pips. This is the official trade. We should be smashing this pretty soon. And yeah, guys, that's basically it for today's channel, today's YouTube video. I want to show you guys how we caught this GBP JPY trade. It was a phenomenal trade indeed. And we still have a few pips to go before we actually smash our final target. And yeah, hopefully you guys enjoyed the video. If you did, like, comment, and subscribe. And yeah, if you guys need anything from me, be sure to leave a comment down below. I'll get to you as soon as possible. And if you guys want to contact me on my Instagram is @TradeWithJohn. All right, you guys have a wonderful day. Later.